What if I need the money? What if I can't be consistent? What if life gets in the way? What happens if? It's always a fear-based question because we don't have crystal balls to look at the future. And I want you to hear this clearly. Those are not financial questions. They're leadership questions. And the reason they keep repeating is because infinite banking is forcing people to make a decision that they've never been asked before. Hey, it's Jason Sipple, and I appreciate you being here. Let me just start with, how many of you ever looked at your bank account halfway through the month and thought, where the heck did all my money go? Or maybe you're making really good money, but for some reason, you're still living and feeling like you're broke. Pop an I in the chat if that's you, because yeah, I get it. I've been there. And before we jump in, let me just say, good on you for showing up. Seriously, what most people won't do is show up for themselves. Most people keep just winging it financially. And the fact that you're here, that already tells me that you're in the uncommon category. And today we're going to break down exactly why so many Americans feel like I'm working harder and harder and harder, and nothing seems to work. So we're going to get into is why most people never really take control of their money. The simple personal system I use and teach that gets you out of the paycheck to paycheck loop, the rat race, and what financial leadership looks like. Not just the numbers on a spreadsheet, but the questions that you're asking yourself daily and how you lead your future self. And I'm going to hit you with a question I almost ask in every strategy session. It's simple, but it throws people off because it makes them realize they're not just one person when it comes to money. So stick around, you're going to see what I mean. So let me start here. Last week we talked about what it really means to pay yourself first. Not just a bumper sticker version, but what it actually means, like how you actually get to be first in line for your money. Not the whatever's left over version, not the saving less than 5% like most Americans. Remember, you guys are uncommon. And since then, the same question keeps showing up in my calls. Different people, different situations, different ages, different parts of the country, and the same questions always underneath it. And it's a version of this. What if I need the money? What if I can't be consistent? What if life gets in the way? What happens if? It's always a fear-based question because we don't have crystal balls to look at the future. And I want you to hear this clearly. Those are not financial questions. They're leadership questions. And the reason they keep repeating is because infinite banking is forcing people to make a decision that they've never been asked before. And it's just a different way of being. It's a different way of thinking. And those that are practicing, and kudos to you for practicing, you know what I'm talking about. And if you're not practicing this in the way that you're running a business, then there's still a lot you can take away from this session. And so when we get to the real decision, when we get to the real questions, it is infinite banking does not, and I just mentioned this a second ago, infinite banking doesn't start with a policy. It starts with a decision. One decision. And how long does a decision take? A millisecond. And there's folks on this call that haven't moved yet, and that's okay. They're waiting to get started. They're waiting for the perfect time. But it's a decision to start. It's a decision to raise your standards, to raise your floor, and let anything that's below that floor fall off. And it quietly asks these questions. And you got to be honest with yourself. So I'd like you to participate, pop in the chat. Can you live below your means? Can you delay gratification? There's a whole list of stuff I want to buy myself, but the question, can you delay your gratification? Can you stop touching, better yet, can you stop spending money that isn't for spending? Can you build a habit before you build the system? And here's the thing, most people haven't asked those questions before because they've been asked to work harder, to do more for their bosses, to do more for their business, to do more for their employees. They're asked to earn more. Their wives might tell them, hey, go make more money. We want to go on this cool trip or we want a pool. They've been taught to trust the system. And the system teaches us to be busy. It teaches us to be um, away from our money. And they've rarely asked themselves to lead the money, like to be the leader of money. We're being led by money. And so when infinite banking shows up, when this concept shows up, it feels super uncomfortable. I know that for most people I talk to, that's one of the two comments they say on every single one of my calls. It's usually they start out the first call, and Scotty can, attest to this. Jason, this sounds too good to be true. My wife says the same thing. And then once it clicks, once the light bulb goes on, it's like, whoa, hey, Jason, I wish I knew about this 20 years ago. If that resonates, it's because it's true. I hear it all the time. There's too many people have told me that to know that that's not factual. So when that infinite banking shows up and it feels uncomfortable, it's not because it's wrong. It's because it's unfamiliar. And so pause for a second, because what we're going to talk about right now, this could literally shift how you deal with your money from this point forward. And it's all in a decision. So I'm about to jump in to introduce a wild concept that throws everybody off. So first, make sure you're smashing the like button. Just smash that thing. Ring the bell because it might just turn orange, and subscribe to the channel. A lot of folks are watching, but they're not subscribing. And in order to serve more people, to bring this uncommon strategy to others, to invite people to the big ass bus, we got to smash, like, subscribe, and invite. You'll be a blessing to that person. So start smashing, start liking, start subscribing, and let's check out how many people are actually in this call and introduce a concept that freaks a lot of people out. Be blessed. Let me ask you real quick. Let me introduce an idea that I talk to with a lot of clients, a lot of people in their strategy session, learning how to do this. And I asked them a simple question, and I want you to play along with this. So, if you're driving in the car, truck, if you're off, whatever you're doing, waiting to pick up your children from school, play along. Like, how many people are in this conversation? This is a conversation every week. How many people? And most people will look and they'll be very logical. They'll start counting. Oh, there's 1, 2, 10, 20, 30, 40. We got a note taker. We've got my note taker. So like 4, and my wife's listening. No, that's not the question. The question is a broader question. It's a reframe question. There's always at least 2 versions of yourself in every conversation. So there's at least 4 of us in this. If this is a conversation between myself and you, there's at least 4 of us in the room. And I'm not talking about multiple personalities. I know, you know, some husbands might think that, yeah, I hear my partner talking to themselves, which is actually a sign of a very healthy person, by the way, not crazy, but I'm talking about your present self and your future self. And your present self, in most cases, wants some relief. That's why you keep showing up here. That's where you're coming back to learn week after week, and you're bringing people and inviting people, is because your present self is looking for some relief, some ease. Your present self wants comfort and certainty, the human needs, right? We want that certainty. We want to know that we're okay, that our needs are taken care of. And that's human nature. And I'm pretty sure that we're all human here. I don't know. Let me look at the list again. And is anyone here, not? All kidding aside, though, Your present self wants that certainty, that ease, that comfort. And I talk about this all the time. And your future self wants stability. Your future self wants options. Your future self wants freedom and peace. And because it's so far removed, like this is the rub. This is the rub. This is in future self thinking. This is in psychology. Here's the rub. What we want for the future is too far away to seem real right now. When we're talking about retirement being 5, 10, 15, 20 years, the time that we need passive income, that's too far of a distance for our brains to make now important. And so what happens as we keep, and I'm going to cover this in a moment, don't move, don't go anywhere, but the rub is what we want for our future is too far away to seem real. And tomorrow's never guaranteed. You put those two ingredients together, are you following? Does that make sense? And all of a sudden, of course, Jason, we're going to live for today. We're not going to think about tomorrow. But here's what I've noticed after thousands and thousands of conversations. And these are brand new facts. As Americans, we should know, or we know, we have the ability to believe that we should plan for the future. Are you following? Does that make sense? Can I get an I in the chat? Like we know that we want to plan not only for our future, but for the future of our loved ones. Intellectually, we get it, but the results are telling a different story. You know, as of December of 2025, the total US consumer debt, 18.6 trillion with a T. That's a really big number. $1 trillion. And our credit card debt is almost surpassing the government's number one asset of our student debt. Now we're at 1.35 trillion, according to a couple of sources. And I'm not ever saying any of this to shame anyone. I'm not saying that something's wrong and you're doing something wrong. I'm showing you what's common. You know, what's common behavior. And then when we start just getting a little bit curious, you know, that's a trait, a quality, a value that I value above most is curiosity. Because when we're able to be curious, we're able to not look at something in a judgmental, is this wrong way? We're saying, well, why is this? You know, why do high earners feel stressed? Why are they worried, uncomfortable about money? And it's never because they're responsible. It's because their present self, the decisions keep being made to serve yourself presently. And while we're thinking about the future, we're locking up our futures because most people are doing this. Most people are still putting money into their qualified plans. And I'm not giving tax advice. I'm not giving financial advice. I'm not a financial planner. So take this for just my experience, my point of view. One of the calls I had today started off with a FedEx employee getting promoted to a new position. We celebrated. We high-fived on the call. I just met him, but instantly I was super excited because I could tell he had been working really hard for this new role of leadership. And he was stoked about his first leadership meeting. And you know what he said to me? FedEx rocks. They match 8%. I'm going to make sure that my team, everyone I lead, puts at least the match in. You know what I did? I listened. And I acknowledged the match is a good thing. It's not the enemy. But as we went deeper into the call, as we talked about control, as we talked about guarantees, as we talked about his present self versus his future self, I was able to ask some honest questions. And when I asked him, like, hey, when you're making these financial decisions, who are you more concerned about? And I want you to answer this for yourself, your current self or your future self. Because the uncomfortable truth for him, like even though he felt like, hey, I'm getting an 8% match, I'm getting 8% free. Currently, he's stressed out. Currently, above and beyond his mortgage, he had quite a bit of bad debt. you know, car payments, credit card payments, a personal line of credit, all paying high interest rates to somebody else. So that is a way that he could just shift that one thing that we always talk about to change this. And he came into the call, even though he felt good about where he was financially, he knew there was better. He knew there was a better path forward, and he just wasn't quite sure how to do it yet. And so, if your current self is feeling like a little bit anxious, a little bit stressed, and if you're stressed and worried about money, it's normal, but if you're barely breathing financially, if you're constantly watching what's happening, where you're going out, what you're doing, like measuring and monitoring money is one thing, but to feel stressed, to have all that extra cortisol in your body, that's not healthy. And if you have bad debt, let me just bring this home. Let me land this point for you. If you have bad debt and you're paying your future self, but your current self is suffering, is that the most optimal thing you can do for both of you? Yes or no? Black and white. Again, if you're getting an 8% match in the future, but you're paying somewhere between 11 and 25% to all these different entities today on a dollar that's worth more today than it's going to be worth in the future, yes or no, should we keep taking care of our future selves when we're suffering presently? And my answer, I don't remember how I asked the question because I'm sure you guys have the answer correct the way I asked it the first time. I just changed it a little bit. But my thinking has to say if there's actually two of us in every decision and we look, is this helping us reach both our destinations? Is this helping my future self take back control of interest, heal myself currently, heal the wounds of following a common pattern, set myself up with an opportunity fund to move to the future, to have liquidity, to have cash flow, to do all the things? It changes just one thing by looking at that question differently. So, again, if you feel like you're drowning today, if you feel like you're suffering, if I feel like something doesn't feel quite right, infinite banking doesn't ignore your future self. It bridges the two. It puts you in a situation where now you can have the money compounding uninterrupted. It's protecting your family and you're actually using it because you get to borrow against it. And instead of looking at your bank account and saying, wait a minute, where'd all my money go? We're only 15 days into the month. Where'd all the money go? Or maybe, you're pulling in a really decent income, but every month you feel like you're starting over the same cycle where you're racing towards the end of the month, hoping and praying it's going to work out because you're following common thinking. And again, there's nothing wrong with common thinking, but if you want to be uncommon, if you want to raise your standards, your floor, if you want to have a different outcome, then like Einstein said, we have to start doing something differently today. And now most people, even a lot that are practicing infinite banking are still putting money into qualified plans. And that's okay. Just different assets, different outcomes, different things you're looking at. But the one thing that keeps coming up for people who, when they're getting ready to start infinite banking, they're not just asking, you know, can you save money? Like, that's not the question. The question is, can you protect your capital? Can you create non negotiable habits? Can you stop stealing from your future self to comfort your present self, to feel better by doing something that you don't even need? You're just trying to change your state by buying something, eating something, doing something, getting something that's not really good for you physically. But can you stop stealing from your future self to comfort yourself presently? And that switch is hard. It's not complicated. It's actually really simple, but it's hard. And it's not because we're weak. It's because most people We're never trained to do this. We're not taught, or we don't think about the distance, the future. We outsource our discipline. We outsource our thinking. We outsource the leadership. Infinite banking is here to hand it back to you. This session is here to give that back to you today. If you haven't started yet, some of you haven't, if you need to expand, let me say this as clearly as possible. You don't fail at infinite banking because of the math. You fail because of the habits. I'm working with another client right now. Her strategist told her, put as much as you want in this policy. And this is 3 years ago. You can, and she's someone that's a high earner. She's got $100,000 plus immediately available to take a loan out. What he said is you never have to pay the loan back. You don't have to pay the policy, the full premiums every year. Like, you don't have to capitalize your system. And now 3 years later, things are getting kind of messy. So infinite banking didn't fail her because the math didn't work. It failed because of the habits. It failed because you can't leave the money alone and not pay attention to what's happening inside your system. And when you start paying yourself first and you want to protect the capital, so it's not as easy as saying, hey, I'm just going to pay myself first. It's where do I store it that's protected, that's guaranteed, that's controlled? Because the infinite banking system is always going to ask you, can you do the same for yourself and your family? You know, the system's not going to save you, but can you, in your thinking, start putting the systems in place that's going to take care of yourself today, your future self, and your family? All right, let's bring this home. Let's land the plane. You came here for clarity around your money, and hopefully you're walking away with a lot more than that, because this isn't about numbers. It's about leadership. And the real question is, are you leading yourself, or is your money leading you? For the common folks, money is probably leading them, and that's okay. And not just leading the version of you that shows up for work, handles the bills. I'm talking about the deeper version, the one who's trying to build something better. Let me ask you this. Which of your two selves are you taking care of right now? Write that down. The one that's trying to survive, or the one who's ready to thrive? Because once you build real confidence with your money, you can take the final steps that actually move the needle. And when I talked about raising the floor and not going below the floor, the folks that are ready to do this are the folks that are paying themselves at least 10%, no matter what. They're spending less than they make. They're living on purpose, not by accident. They could qualify for whole life insurance. And you have all of the decision makers in the house align. This is just a tool, what we're talking about. So it's your plan, or not just your plan, it's your family's plan. That's when you know you have a real handle on your finances. That's when you're ready to have a strategy session. So if you're feeling like, yeah, Jason, I got that, then make sure you're scanning the QR code, you're booking a call with me, and don't forget to smash the like button, ring the bell, and subscribe to the channel. Invite more people out, because once we book that strategy session, we're going to get specific, we're going to get clear, and we're going to build something that actually fits your life. As always, I appreciate your greatest asset. It means a ton to me that you're showing up, that you're putting your time in to investigate in yourself and thinking differently. You've already taken the first step. Don't stop now. Keep going. Whatever you don't have, you just don't have it yet. So God bless. Be well. I'll see you in the next video. Right up here. Don't miss it. Right here. Click on it. Watch it. Subscribe. Smash some stuff. I'll see you in the next one. Be blessed.